Good morning. It's Tuesday, February 4th, about 6 a.m. Central Time. Looking at the markets overnight, the precious metals, they are lower after a volatile Monday trading session, with negotiations fueling the price action with regards to the tariffs. So looking at yesterday's price action in gold and silver, we did see gold reach an all-time high. 2872 is the all-time high number. You'll want to circle that on your charts. You're also your low yesterday, and I think it really defined the edges that we're looking for this week, was 2802.20. So that's a $70 range, and that's going to be your key support and psychological support right at that 2800 mark. Now, silver, we did see a high of 3274.5. What's significant about that is it's lower than the previous high session, so it is a lower high. And then the low on the session was 3161, so we broke through 32. Many of you are working new buy orders at 3160, so we just missed that level. Remember that 3160 was an old resistance point, which now is acting as a new support. If you'd like to get on our daily research reports, use the link below in the description of this video here where you could sign up and you get access to the energy report, the S&P report, the precious metals report, the ags, and the livestock. So when it comes to the commodity markets, we do have you covered. Now looking at some top overnight headlines here on commodities and the latest tariff discussion, focusing in on China. So the Mexico and the Canadian tariffs, they've been delayed 1 month. That's where we saw that wild range in the commodity markets across the board, and specifically the U.S. equities. Once there was news that he delayed the Mexico, we saw that market lift up, and then once he delayed the Canadian tariffs, we saw the market rise even more. Now, China, on the other hand, they retaliated against Donald Trump's trade war tariffs by targeting a handful of American companies, specifically Google, and then imposing levies on some U.S. goods. It's designed to avoid escalating tensions between these two largest economies in the world. Beijing imposed a 15% levy on less than $5 billion of U.S. energy imports and a 10% fee on American oil and agricultural equipment. The Chinese tariffs are set to kick off on February 10th, so we got about a week here before they take effect, leaving some room for negotiation. So that's what we're going to want to pay attention to. If you see volatile price action in specifically China-related commodities, chances are those negotiations are taking shape. Now, we saw crude oil futures, one of your biggest decliners out here, and it seems like everything China related is declining. So you check the one-day performance, lean hogs down 4.5%, gasoline, soybean oil, natural gas, palladium, feeder cattle, your crude oil markets, platinum, and live cattle. All these are big things that are exported here or they're consumed by China, really coming off the board here as your big laggers. Now checking on the grain market, surprisingly, soybean prices, they did decline overnight, but they were able to recover. So the trade tensions could dent American soybean sales as China is a major buyer of U.S. soybeans. So looking at the overnight price action in the precious metals markets, there's unease about what lies ahead in the ripple effect on monetary policy. The Federal Reserve, they paused interest rates at the last meeting here rather than cutting last month, and they're adopting this wait and see type approach with regards to the actions from the new administration. So stagflation concerns are rising. That's where you start to see the bond market warning that imposing these tariffs on the top trading partners really risks the fuel of inflation rising and slowing economic growth. So the market reaction drove short-dated treasury yields higher and longer-dated treasury yields lower, so narrowing that gap between the 2 and the 30-year yield. So the risk of the higher import prices rekindles that inflation threat, and it elevates the concerns of stagflation. So that's where you get the higher inflation and the lower growth, and the Federal Reserve is likely to be handcuffed, or they just hold interest rates where they're at, leaning more towards wanting to cut rates because they are really more pro-growth rather than attacking and fighting inflation. So checking in on one other thing, the cryptocurrencies, we did see record amount of trading in the Ether currency ETF here, and also on the futures volume. Ether fell about 27%. That was yesterday, and it really, once we started to break down, it triggered a lot of liquidations here. So we saw $600 million in futures contracts really come off the board here, and it propelled those futures markets. So looking at some things here that we do have coming out today, there is going to be a little bit of volatility again in the markets because you do have the JOLTS job opening data, you have factory orders, you're going to have 3 more Fed speakers coming out there, but all attention really is on any developments with regards to any sort of trade war. Now looking at traders, and back onto the metals markets, you look at where gold's at, down about $13, 28.43. High of the overnight session was 28.58. Low was 28.37. So the dollar is declining. All your foreign currencies, most of them are rising significantly. The U.S. equity markets are mixed right at the moment here. Some of the softs are mixed as well. Again, the cryptocurrencies were under pressure. There was a discussion about President Trump announcing this sovereign wealth fund. That's where people are thinking that he's not going to have specifically a Bitcoin reserve, that will take the place of the Bitcoin reserve where they can have other assets commingled within that particular fund. Now, back to the gold market, your critical level support is going to be that 2,800 area. It's really pocket support, 2,800 to 2,794, followed by 2,760. Below that's going to be 2740 down to 15. We break down to that low, we're going into a consolidation phase. You're going to want to be looking at using some of these levels here for building your positions here or coming out. On the silver market, I really believe that 3160 is your first kind of support here for short-term traders. Longer-term traders are going to want to wait for that 3003 where we had the January 7th washout, down about 77 cents on the day. That's where your longer term support. You break $30, you're going to see that double bottom come into play, which is 29.25. We saw 2 areas in December where we bounced off those. Back on the reports, if you do get the reports, I put out the tactical ranges on both gold and silver, and that will give you kind of your first line of defense as far as using a volume, volatility, an algorithmic approach towards identifying key levels of support and resistance. You would be surprised at how accurate many times these things hold because it takes into the volatility aspect. When volatility is compressing, the ranges of support and resistance become narrow. When volatility explodes overnight, that's when you should identify and adapt to farther out levels using a higher standard deviation, which I've already overlaid that in the tactical ranges. So remember, if you'd like to open up a futures trading account with us, send an email to info@bluelionfutures.com. If you'd like to get onto the research, go down in the description of this video and click on the link that brings you to the research page, and you can select what reports you'd like to get here. If you'd like to know more about our fully managed accounts, we could send you out the tear sheet. That's for qualified individuals, qualified individual participants out there. We'll send you over the tear sheet, the description of it, and we have multiple programs out here. Again, remember, futures and option trading, it does involve risk of loss. It may not be suitable to all investors. Good luck, good trading.